Good afternoon, friends, and we welcome you all in this webinar. First, we are going to play ICAI motto song. I request all the participants to please put their right hand on their heart. Friends, now it is much more important to know as lockdown 2.0 is going to be started from tomorrow, and in this situation we all are very much eager how our portfolio is going to be worked. But as our dynamic chairman CA Fenil Shah has make us all unlock in this lockdown by coming to this webinar platform. Now I welcome our chairman of Ahmedabad branch, CA Fenil Shah, to give his opening remark. Thank you.
Thank you, Bishan Bhai. The speaker of the noon on a very important topic right now for many of us, Shri Sandip ji from Mumbai, our own Vice Chairman, CA Harit Dariwal, Secretary CA Bishan Shah, Treasurer Rahul Maliwal, and all the members who are attending this webinar and also students who are attending this webinar. I welcome you all to this webinar after the announcement of, as Bishan Bhai rightly said, lockdown 2.0. Now, friends, I want to update you that the very first thing that at branch level, we are also collecting the funds for supporting this COVID-19 relief. So I request you all that generously donate to our own ICI fund so that government can take more and more measures and we all can come out of this pandemic situation. Second, in every webinar, I'm appealing you that right now it's a right time that we become the extending helping hands of a government. What role we can play right now? Then the very first role is we all and all our family members need to download the app, Arogya Setu app, because this is the app which provides the right information. It also provides all help desk numbers, and this is the right medium right now for government to communicate with us. So we all, being a responsible, careful citizens of India, being chartered accountants, we should always download this app. Moreover, friends, we all are working from home and we have also started doing research from home. So from branch, we have sent a mail to you. So if you are interested in doing research, kindly fill up the details with respect to that. And as the lockdown is already extended, within a day or so, we'll be coming up with new programs for overall development of all the members and students also. Plus one more important update. We are going to specifically request, the steps have started taking place to Government of Gujarat, that if Government of Gujarat and AMC can provide a special time to chartered accountants by showing our membership card to commute to their office, let us say for 10 to 11 in the morning. So for a few days, 1 or 2 days, then they can go at their office, they can collect important data and documents, and then they can very successfully start working from home. From branch side, we have started taking these efforts. Let's hope for the best. And if this happens, then we in a very dedicated disciplinary manner will be able to go to our office for some time and we collect the data and we can start working efficiently from home. Friends, right now there is a lockdown, but what's a single way by which we can communicate to you and you can communicate to us? It's through email ID. So kindly keep going through all the emails which are coming off the branch and keep on requesting whatever kind of request you have from your side. So with this small base, now I request Rahul to carry on the session further.
Thank you so much, Fenil bhai. The session for the today's is with regard to the economy of India and how the economy of India will shape our share market and the stock market that will turn around our portfolio, because we are so much concerned from the Nifty 12,400. Now it is approx 9,000 or may go lower, may go lower because of the further lockdown. But so that for that we have the expert with us to deal the particular situation. Now I'll request Harit bhai to introduce the sir.
Thank you, Rahul bhai. Very good, very good afternoon, everyone. It's my pleasure to introduce Mr. Sandip Sabharawal ji. He is one of the best-known names in Indian stock market advisory services. He is a BTech in Chemical Engineering from IIT Delhi, and he did his PGDM from IIM Bangalore. He started his career with SBI Mutual Fund. He has worked for 11 years of his career. During his tenure as head of the equity AUM, the AUM of the fund grew from 300 crores to 6,000 crores. Then he worked in JM Financial Asset Management Company Private Limited and was chief investment of equity funds. During his tenure, the AUM grew from 200 crores to 5,000 crores. Then he headed the PMS division of Prabhudas Leelasar Private Limited. He is now a SEBI registered investment advisor. He is regarded as one of the best stock pickers in the Indian equity markets with a proven track record of picking out multi-bagger stocks. With this, I welcome you, sir, to the Ahmedabad branch webinar. And sir, especially all the CAs and students and members listening, this topic is very close to our heart. In fact, it's like an essential commodity to us in the times of COVID-19. So after reading your introduction, sir, I'm tempted to ask you three questions on behalf of all the participants at the front. That as US Secretary of Defense had once said, Ronald Rumsfeld, that it is time for unknown unknowns, which is what we are facing right now. So how would you help us to invest in this times of uncertainty? Second, sir, as you have seen that you have grown the individual AUMs of all the funds that you have been. We as individuals who are having funds that are still in thousands, in lakhs, in crores, how can we also become even more efficient dealing with that? And third and but last but not the least, I think being an Ahmedabadi, I have to ask you this, sir. Which are the next multi-bagger stocks as you pick them the best? So do let us know that also, sir. On this brief note, I welcome you to Ahmedabad branch, and I'm sure we will have a great learning. And thanks to Rahul bhai and Bishan bhai and Fenil bhai for coordinating this wonderful session. Thank you.
Thank you.
Yeah, everyone. Thanks, Rahul, Bishan, and all other office bearers of the society in Ahmedabad. Now, I will, Harit, obviously address your questions as we go along, because I think if I address it upfront, then I think the entire flow might get disrupted a bit. So I'll address them. In case I don't, so please remind me later. So that's how I start off. So the first things first, I think the economy is the barometer of the stock markets. The stock markets are just a derivative of what the economy does over long periods of time. In short periods of time, it's more to do with sentiments and demand and supply. So there could be times when economy is doing well and markets are not doing well. There could be times when markets are doing well and economy is not doing well. And there could be times when both are doing well or both are not doing well. So I think there are different combinations which exist in the stock markets and the economy, which all of us have to be versed with, because the correlation is not one to one. There are a lot of factors which determine how stock markets do. So first, what I'll do is I'll just talk a bit on the global perspective. See, I and none of us are medicine experts, so we don't really know where this crisis is going. What we can do is we can look at historical perspectives, do statistical analysis, because in a lot of these diseases, as you would also be following a lot of blogs, Twitter handles of doctors, etc., and many mathematicians, a lot of these viral infections actually tend to follow mathematical models. So even if you are not a doctor, you can reasonably project the way they will go. So you might be wrong or right, but then you can have a reasonable projection. Now, first we come to the global perspective. Now, globally, the way I think of this event is, it is sort of like demonetization having hit the global economy. So all of you will remember demonetization, how it hit the Indian economy. The economy came to a standstill for a period of time because money flow got restricted, and as money flow got restricted, we saw that the entire economy of India slowed down significantly before it bounced back subsequently. So demonetization had some positive side effects like digitization of the economy, things improving on some aspects, and a greater take up of GST subsequently could happen because of formalization of the economy and many channels of payment. But then it did have a negative impact at that stage, and some of that impact is still felt today. Now, globally, it's the same thing. This is an event which is unprecedented. It's hit the world economy in a very, very big way. Now, for example, yesterday I was actually reading one of the reports of a large US brokerage who has projected that the GDP which existed in the USA till February, they will not come back to that GDP for the next 2 years almost. So I think that is the damage that 1 to 2 months of this attack of COVID globally has created on the global economies. Similarly, for India, I did my own calculations based on two assumptions. My first assumption was that there will be a 60% impact on GDP till 30th of April. Now it's 3rd of May, till when the almost full lockdown is there. And secondly, assuming that from 1st of May till the end of May, the impact on the economy will be around 40%. So 40% of the GDP will not get produced in May, and 60% for the first 37, 38 days when this lockdown has existed effectively from the 22nd of March. So those calculations threw up figures which could be quite surprising for many of you. And those figures are that the impact on the GDP could be around 19.5 lakh crores. Now, what does 19.5 lakh crores means? So it's 19.5 lakh crores means that out of a total GDP of the country of 200 lakh crores, we lose 19.5 lakh crores in a period of 2 months because of the kind of lockdown we are in. So what does this essentially imply? What this implies is that for us to go back and reach the GDP, not the target which the government has of eventually reaching 5 trillion, even for us to reach back to where we started from 2 months back, it will require a 5% growth in GDP for the next 2 years continuously, and then we reach back to that level. And it's very similar to what the projections for the USA are. Despite the fact that many of the countries, both in Europe and US, are impacted much more by COVID than India in terms of medicinally, at least till now, the impact on the economies are turning out to be very similar. Now, the bounce backs and recoveries could be very different for many countries depending on the response of monetary as well as fiscal authorities. Now, we've seen unprecedented fiscal stimulus coming in the USA. The US Fed's balance sheet, since all of you are CAs, you would know, the US Fed had a balance sheet of around $4.2 trillion when the crisis hit us. In just 2 months, the entire balance sheet has expanded to around $6.5 trillion. So they have effectively expanded their balance sheet by $2.3 trillion, almost equivalent to 10% of US GDP. On the other hand, the US Congress and the US government has passed a fiscal stimulus amounting to 10% of GDP. So if you combine fiscal and monetary, there's been a huge stimulus given to the overall economy in the USA. Now, all of us understand that monetary policy and monetary stimulus operates only when the demand side is intact. So if the demand side is not there, whatever stimulus you might give on the monetary side, it doesn't work. So surprisingly, RBI came out with an excellent policy when the MPC met, and they came out with their policy where they did much better than what I actually expected. They cut the CRR also after a very long period of time, and they did a lot of moves on cutting the rates. They announced new LTROs. They have been doing open market operations in the markets. So the monetary side of the market has worked well. They have deferred EMI payments, they have deferred working capital interest payments, etc. But a lot of people have argued that why did the RBI not do more? Why did they actually not uh, announce interest rate waivers, etc.? The fact of the matter is RBI cannot do that, because RBI does not have the authority to do that, because they can just do deferments, they can give ease to people, they can cut rates, they can reduce the interest rates, but they cannot do write-offs. That has to come from the government. So it is only the government's initiative which can actually create a significant real impact for most people. For example, I actually had given 3 suggestions. One, the government takes over almost 60% of the interest payments of all people who have taken bank loans without any distinction for 2 months. So it would have cost the government around 1 lakh crore. So it's a 1 lakh crore cost to the government, but for 2 months, no one pays interest on whatever loans they have taken from the banks. Because then if you go about distinguishing that we'll do only for X, not for Y, then it's a moral hazard that you might be wanting to benefit only a particular set of people. The second thing which I actually proposed was that they should do some rent waiver for people who are on rent, because there is effectively zero turnover and no business is designed for a zero turnover. So you do rent waivers, and the impact of that is difficult to estimate, because many people have their own properties, many people work from home, etc. So how much that rent waiver would be, that amount was difficult to predict. And the third thing was on the wages, and all these 3 things have been done by governments across the world, where there's been wage support, there's been interest rate support, there's been rent support. Now even on wage support, again the formula would be the same, taking care of 50 to 60% of the wage cost for 2 months. However, we are yet to hear from the finance minister, so let's see what they come out with. But effectively, till now, whatever fiscal stimulus they have given is just around 0.5% of GDP, because they announced 1,70,000 crores. Some of them were from the old schemes, etc. So effective real impact was just around 1 lakh crores. So that's around 0.5% of the GDP. Globally, if you see, the stimuluses have ranged from 8% of GDP to as much as 20% of GDP proposed in Japan. We don't know whether they are going to do that or not, but people who have already announced, like Singapore did 11.5%, South Korea is already at 8-9%, Australia is around 10%, and many other countries have done that. So I think that's the kind of fiscal support we require. Now, India obviously has its own fiscal constraints because of historically high fiscal deficits, both at the center and state level. And to that extent, I don't think we can go that way. But even if we do 2 to 3% of fiscal stimulus, I think that by itself could be quite positive. So that's how the economy is positioned right now. I think it will be tough for the economy to revive immediately after things move out, because monetarily the economic action has been good, but on the fiscal side it has not been. And the economy is like a huge, it's like a very heavy sort of machine, which when it's moving, it keeps on moving by its own momentum, but once the momentum stalls and it stops, to restart it, it requires a huge amount of force. Now that force will need to be put by the government at this stage, because the private sector does not have any ability to either invest or and many of the private sector companies which are actually looking at investments going forward as demand picked up, because the demand has collapsed so much, all the private investments are going to get deferred. So the onus on even reviving the fixed investment cycle will be on the government. Now, the lockdown, now it's been extended. Now the real impact will be seen after we see the concessions, if at all, what the government announces, because the Prime Minister did say that from 20th of April some concessions will be given in some parts of the economy, etc. So that is something we need to monitor, because what initially happened was that everything was stopped, and then slowly some concessions were given, but by that time many of the companies and factories, etc., closed down. Many of the migrant workers, many of the workers on contract actually moved out, and getting them back and getting them started is going to be very difficult. Many of my friends who have factories and industries, what they are saying is that many of their labor, even if they are around their factory compound, they are in the same state, their state of affairs today is that once the lockdown opens, once we will go home and then we will come back and then we'll start working. So now if that is the majority view, then even after the lockdown opens, it will not be that the all the industries and factories and companies can start working very effectively. It might actually happen that they might want to start working, but they might not be able to, because the majority of the labor is not available. So I think that's one thing which we'll need to monitor once the lockdown ultimately goes. Now, people also try to compare what this COVID hit is as compared to 2008 financial crisis, and the fact that how similar or dissimilar it is. I think it's very dissimilar, because 2008 financial crisis was largely restricted to the Western economies. Its impact was felt on financial markets globally, and also on companies which had forex borrowings, etc., unhedged, and the fact that at that time inflation had shot up so much, so that led to a total disarray in the overall financial system. And so all of us have studied about 2008 crisis, so I won't go deeply into it, but I think it's very different. This time the impact is global. This time the impact is global, both in terms of the demand side as well as the supply side getting impacted. And to that extent, the revival cycle also will be slow. Now, initially, when the numbers of COVID cases in India were pretty restricted and we saw a very severe lockdown from the government, my view was that actually that we could see a state where this crisis will actually turn out to be something which could be, which could lead to India actually emerging much more stronger. But we have had actually a lockdown which has been much more severe than most of the most impacted countries also. For example, Italy and Spain, people talk of, they initially started off with a much lesser degree of lockdown. They increased the lockdown, so now it's very similar to what there is in India. But even with 2000, 2500 cases, what Spain is now doing is that they are actually trying to open up the economy starting the 26th of April. So I think eventually in India also that situation needs to come, because finally it is my personal view that a virus cannot be locked down forever. A virus is a virus which will have its spread. Now we can, the purpose of lockdown has to be get ready medically and through various other systems like Arogya Setu, etc., being made compulsory, masks, etc., so that once the economy opens up, whatever degree of spread happens, it can be contained. So let's see when that thinking process comes through from the government. uh, Now, coming to the stock markets. Now, overall, what we saw in the stock markets was that stock markets are the things which are most linked globally, because uh, economic performances do vary, but stock markets tend to be extremely linked in the short run. Although in the long run, we have decoupling depending on how relative economies do. For example, for those of you who are tracking market performance, you would see that the South Korean markets have started to do much better than other emerging markets. Uh, the Chinese markets obviously have been doing well because they have bounced back the fastest. But South Korea is standing out because they have controlled this entire thing without a complete lockdown. Many of their industries, factories, everything is still working. and to that extent such economies could come back faster. Now in the Indian context, we saw the markets correct by around 40%. My view was that a 40% market correction and the panic bottom which we formed in mid-March should hold. So I think I am still of the view that that could be the worst case for the market, but still most of the markets have bounced back significantly even from those levels, because at a level of 76, 7700, the Nifty market capital, the Indian market's market capitalization to GDP actually went below 2009 Feb March levels. So on market cap to GDP basis, we actually became cheaper than in early 2009. Although the market fall at that time from the top was much greater, because we started off from a much higher market capitalization to GDP. This time we didn't go to that level to start with. We were still higher than 2003-4 bottom. So in 2003-4 bottom, the market cap to GDP had gone down to as low as 40 to 45%. So we were higher than that, but we reached 50%, and from there we have bounced back. So my guess is that that could be one of the worst case levels. But markets have bounced back significantly from that level till 9,000. So it's a 20% rally, and it's in line with most other markets. So if you see the US markets, they have also bounced back around 23-24% from the bottom, and it's very similar for most of the markets. So then it creates a very wide range in which markets can trade. So my guess is over the next 2-3 weeks, markets should give up some of these gains and come back again, try and form a bottom which is higher than the earlier bottom, and that could be some place where we could get more comfortable, and that could also be nearer the end of the second lockdown. And the thing which could change this is if some medicine regime gets proven. So we could have a scenario where there are a lot of medicines under trial. All of us know there's Avigan under phase 3, Remdesivir under phase 3 trials, hydrochloroquine trials are going on, etc. So there are a series of medicines which are being tried right now. Obviously, the vaccine is much far away. So if over the next 15-20 days we get results from this trial which actually shows that the COVID spread or early stage intervention through a particular set of medicines or medicine can actually be significantly beneficial to people who get this, and to that extent, if there's a treatment regime and then we don't actually need to have those kind of severe social distancing as well as shutdown norms, then the paradigm could change. But on the base case, that is the view which I have. Now I will come to some of the questions which were raised initially. So I'm not sure if I remember all three of them, but I think one of them was how to keep on building up the portfolio over a long period of time so that it becomes a winning portfolio. I think the only way to do that is that if you are someone who is a contrarian investor. So I think over long periods of time, only contrarian investors are able to build up portfolios at cheap valuations, because all of us will realize ultimately that long-term value of a company does not depend on what a particular quarter is. So there could be a disastrous quarter, there could be a write-off like this. So unless and until the company has such huge debt levels that those debt levels itself kill the business of that company, long-term values of a company do not depend on what happens in a particular quarter. Because if you follow the net present value basis of valuing companies, so a particular quarter really doesn't matter. But stock markets tend to react in a quarter. There is euphoria and despair, which is a play at various points of time. So people who buy during despair normally do very well. So I would think that buying in despair is the best strategy, because you keep on adding up stocks which you want to have at cheaper and cheaper levels, because all of us know mathematically that for 1,000 rupees, if ITC traded at 400 and if it trades at 150, we get many more shares at 150, and to that extent the cash flows of the company remain intact and dividend flows remains intact. So over a period of time you can build a portfolio which sustains your annual income on just dividends, and that is something which some of past investors, longer term investors have been able to do. So then once you are able to do that, you're not bothered about short-term stock price movements, because the cash flows of the companies which you have invested in themselves give you so much money that you are not bothered. So I think strong cash flow companies, whenever they become cheap, should be bought into. Now, so what example could I think of in the current context, which is getting beaten down, is maybe let's say the multiplex industry. So I think the multiplex stocks are getting beaten down left, right, center. They might get beaten down further over the next 1 month, but we have to realize that people will start going out again eventually. It's a oligopolistic industry where 2 3 companies control the entire market, and eventually normality will come back. So if a stock was trading at 2000 and you get it at maybe 700, 600 or 800, whatever, I can't predict a value where it will go to. I think it's more a time thing. By the end of the lockdown, we will get the bottom in these prices. So whatever that prices you buy, you will make good money out of it, because these companies don't have debt, they are debt free, and to that extent they'll generate cash flow. So I think such are the kind of philosophy. If we could actually inculcate them with discipline, we could actually keep on building up strong long-term portfolios. Uh, uh, so I don't remember the other question. Sorry.
Sir,
Sir,
one more question. That which are the sectors which will be most affected on both sides, positively and negatively, because of this COVID-19?
I think positive impact is relative. So I think one sector I can think of which definitely is positively impacted, and that's telecom. All of us are sitting at home. We are using more data. We are using more voice. So the first stock which actually I added, I did not have for a long time in my portfolios, was Bharti Airtel. So I can share that in public forum also. Now it's one of my biggest holdings, because I think over the next 3 4 years, industry consolidation will take ARPUs up, and data consumption and voice consumption actually has gone up rather than gone down. And to that extent, I think that's one sector which clearly benefits. Which will bounce back faster, I think it will be consumer staples, consumer products which we need to consume. So you need to consume soaps, you need to consume toothpaste, you will have to buy things you want to eat. And once the lockdown opens, there could be a strong move. People might actually want to buy more. So I think those will be the sectors which will bounce back fastest. Some of those stocks might be expensive, and but then as so markets tend to be volatile, so that this volatility should be used to, I think, actually add on to those stocks, because those will be the least impacted. Most of those companies are strong cash flow, they don't have any debt. Any of the FMCG companies you pick out, they have no debt. So I think there the bounce back will be fastest. uh, Pharma is something which has done very well in the near past, like last few days. So people are suddenly getting gung-ho on pharma. No one wanted to look at pharma when it was in value zone. Now everyone wants to buy pharma. But pharma story, I think it's still if and buts, because you have some products which are actually which could do well, but a large part of the market is stalled for them. And to that extent, we really don't see the I really don't see such a significant positive impact unless and until there is actually some deal which the Prime Minister has made with Donald Trump, that FDA won't trouble Indian companies so much if we supply whatever they want right now, of which I'm privy to any such information, so I cannot really comment on that. So X of that, I think pharma, some companies do have value, but then we need to be careful on stocks which run off 40 50% at a time when markets going nowhere.
sir, as you mentioned right now, that for example, the multiplex sector has gone down because of this COVID-19. But at the same time, you mentioned that in case if we have some leverage companies in that, for just example, in case if we take any of the share just for the educational purpose, just like a PVR, that is the who is the runner in this multiplex sector. But as you mentioned, but it has the leverage in his balance sheet to that great extent. So should we go for the good business which even have the leverage position in their balance sheet?
No, actually, debt on PVR balance sheet is very small. I don't. So it won't impact it so much. That's what my view is, because so the leverage also has to be relative to the size of the company. So just because it has few hundred crores of debt, it really doesn't matter. I don't think so. I don't think it has an influence on what the value of that company should be in the long run.
Okay. And the second you mentioned right now with regard to the consumer goods, that is in case if we take the Lever, Nestle, but they all are trading at more than 60 P's or 60 P multiple, more far away than their parent company. In case if the Nestle say it is trading at 15 to 16 times of price to earning. But sir, when we look at the Indian perspective, that value investment or value at any price, growth at any price. So if you look these particular companies, it looks like that growth is at any price. So is it good for the investor to still go for these companies?
So I think the price levels can be chosen at what price levels you want to buy them, because HUL also cracked in between. So many of these stocks will give opportunities for investors to buy. So you don't buy when they are. So right now, why they are at all-time highs is that investors are panicking. There's total complete panic, and everyone wants to buy just safety. So people see safety in these stocks and they are buying them. But there will be periods of time when you will get opportunities to buy them cheaper. For example, there was a phase where I remember when crude oil prices suddenly shot up back in 2018, and people beat down stocks like Asian Paints and Pidilite at that time. That raw material prices are shooting up, so their margins will get impacted, etc. So Asian Paints came to around 1,000 level. I think Pidilite came to 600, 700 odd levels. So those are the times you actually use to buy into these stocks to hold for the long run. So you don't buy them when there's euphoria. So I would agree with you that don't buy Nestle, don't buy HUL today. But some of the second rung FMCG companies, they haven't done as well. So you could possibly look at them.
Sir, one of the viewer has asked that I also request you to please inform your views on the gold.
So I am actually, I have always been an advocate of holding gold in the portfolios. So I think Rahul follows me on Twitter. I don't know who all does. So whenever I write, people should have gold in the portfolio. There is a whole set of Warren Buffett followers, or supposedly Warren Buffett followers, who come out and say that no, he says it's a valueless asset, we shouldn't hold. But you know, there are very different perspectives. He sits in a country which has a reserve currency. We don't sit in a country which is a reserve currency. So our currency depreciates. So when we are looking at the value of an asset, we are looking at it in rupees, not in dollars. So if you see, a huge wealth has been created for investors who have bought gold at any period of time in India. So people say that, so I think housewives are smarter than people. So today I put a comment on gold prices. So someone actually commented that housewives in India are smarter than all the people who do so much fundamental and technical chart analysis, which actually is true. So I would say that people should definitely hold gold. I still see that gold doing well because the kind of money which is getting printed globally. You see, today's data which came out, it shows that US budget deficit will go up by 18% this year. So that's the kind of stimulus they are giving. US Fed balance sheet I talked of earlier. ECB is printing money, Bank of Japan printing money, everyone everywhere is printing money. Ultimately, this money, not now, in 2 years, 3 years, 5 years, somewhere it will create a huge inflation spiral globally. And as that, in that inflation spiral, the only thing which will save you is gold. And if you are holding gold before that spiral happens, gold could double, triple in those periods of time. So I don't, it's unimaginable today that gold could trade at 1 lakh rupees per tola, but it will be a reality in a few years.
Another viewer has asked, with all this background, why does the stock market is having such volatility? As we all are aware that currently the situation is like panic, but it's going to improve in near 1 or 2 months. So why there is a volatility? That is what one viewer, Umesh Ved, has asked.
So I think that's more about generally all of us being optimistic. So people believe that in 2 months things will be much better off, and to that extent we believe that why should things fall. But market, as all of us know, what is a stock price? Stock price is just the price at which the stock clears in the stock market. It has no other significance, because at every price of a stock there is a buyer and seller with different views. So if I am buying, if like Rahul said, HUL, someone actually bought HUL at 52-week highs last week, and someone actually sold at that level. So there are two contra views. So that those contra views create the volatility. Now, when the contra views become more and more entrenched and more away from each other, then volatility in the markets tends to be higher. When the views tend to converge, then the volatility reduces. So I don't think volatility should be a big concern for investors, for long-term investors. For traders, yes, because in today's day it is tough to predict what the next day's market will be. So then whoever is trading now actually is throwing a dart in the dark, because one day markets are 400 points, next day is down 400 points. So what are you trading on? We don't know. But as an investor, when it's down 400 500 points, if you can find pockets of value, you buy. Now that 2-month theory which of the question, it could actually play out, and if it plays out, whoever is bold enough to buy now will make a lot of money. But then there's uncertainty, right? We don't know. Do we know for sure that in 2 months it will be better, or in 2 months it will be worse? All of us hope, all of us pray, all of us being optimistic would like to think in 2 months it will be better, but actually factually, if you look at it, we don't know.
When we have discussed here, we were of thinking, since there is this much volatility, why the government is not locked down the stock market, or I can say why there is not a stock lockdown so far as the speculative trading is concerned. Is it possible for government to lock down the stock market, or stop the speculative transactions?
So I think initially when this crisis was building up a lot, I also had a view that maybe they should shut it down for a few days, because we are not even sure on what basis people are trading. But then there are 2-3 counter views. One, when globally all stock markets are on and we shut it off, then our participation in the global indices becomes a question mark, because we have a lot of flows which come from benchmark funds of global emerging market funds, global funds, etc., in which India has an allocation. So if you shut down the market, because China also, if you see, actually they didn't shut down the market, they just extended the lunar holiday, and after that they've been on. So shutting down could cost us in the long run by participation due to of the participation of the FII. So today we are concerned they are selling, but then selling is a matter of redemptions, because everyone is getting redemption, they are selling. But eventually when the flows will reverse, we want the reverse flows also to come to India, right? But if we shut down the markets when no one else has shut down, then we could have a scenario that people will say that this country shut down markets on a whim, and then we will not allocate to India, because we might invest and our money might get stuck.
Sir, regarding the SIPs, now we all are having a fixed amount going to SIP each month. So looking at the current turmoil and going forward, what is your suggestion regarding the SIP? Should we increase the amount? Should we stop it? Should we invest more? What is your take on it, sir?
And sir, adding to this, whether one should go for blue chip or mid cap or multi cap funds.
See, I think one thing which people should totally avoid is going into sector funds. I don't like the sector fund theory, because sectors tend to do well and bad at various points of time. So you will, and many of the other investors will see a huge number of mutual fund salespersons come to you now over the next few days, showing spreadsheets and trying to sell pharma funds. Please don't fall into that trap. Stick to diversified funds. That's one. Secondly, on SIPs, I think people who have SIPs and you are confident of that fund's performance, you should stick to it. But if you think that you could have cash flow issues over the next 2 to 3 months because of your overall income levels going down, which I think most of the CAs won't, but some people could, and to that extent you need to conserve that cash, then I would say don't withdraw the money which you have invested at these levels of the market, but you could possibly stop SIPs for 2-3 months, watch your cash flows and start again. So I think that would be my best advice.
Sir, the next question arises between the people that how to find now the multi-baggers, because the thing is that now the management is more corrupted, more concentrated to their revenues. For example, we have seen recently that is the case of Manpasand beverages, that is the DHFLs or something like that. So will it now possible to get Bajaj Finance again?
Yeah, for sure. So,
That goes with my question, sir, in the beginning.
no, it will happen for sure, because if India's GDP, leave aside till 2024, if India's GDP even till 2028 has to go to 5 trillion from wherever it is today, then a huge amount of wealth is going to get created, and for sure there will be companies which will be multi-baggers. Now, but the search for a multi-bagger should not start with that I will only invest in a multi-bagger stock. The start has to be to identify a good company with a good business model and good management, which is a question mark, because many people do not have the ability to do that. But if you interact with the management for long enough, which professional investors can do, then you tend to get some idea of the quality of the management. Then some of those stocks will become multi-baggers. So this philosophy where people say that buy this will become a multi-bagger, I don't agree with that. What I say is that you go and identify a good company with a good business model and good management, and eventually it could become a multi-bagger, and then you can obviously tell people that I identified that multi-bagger 5 years back, 10 years back.
Sir, one of the viewer has asked that what will be effect on banking and especially NBFC? And
Yeah, so
second is oil and crude in companies, that is ONGC and all. Yes, sir.
So ONGC unfortunately is in a bad trap. They were forced to buy HPCL. A lot of their cash flows got removed, and now the oil price crash has happened. So I think it's unfortunate, but I think ONGC is going to find it very tough going forward. Uh, Banks and NBFCs, it depends really on what the government does. Because in the US, we've seen that the US Congress has given a $400 billion backstop to the US Fed to buy into assets which are not government securities also, and that backstop takes care of any losses which the Fed might potentially make. In India, there is no such thing. Now we need to see how the finance ministry reacts to whatever is happening, because if it is just what RBI announced in terms of deferments, then those deferments are not really going to help much on the point of time. There needs to be real relief in terms of the interest cost which companies are paying, and the recognition of NPAs and what is recognized as an NPA. If some of the real things happen, then we have to take a different view. Otherwise, I think many of the smaller banks and NBFCs are going to find it tough. Even if you look at the data which has come out till now, most of the smaller private sector banks have lost deposits, and the deposits have gone into SBI, ICICI Bank, HDFC Bank, and maybe and Kotak Bank. So I think these are the banks which have really benefited. IndusInd has lost deposits. Yes Bank, all of us know of. We don't want to talk much, but many of the smaller banks, private sector banks, even the smaller PSU banks, people have become scared, removed deposits from them, and gone into these bigger banks. And deposit is finally the sort of what the food of banks. So if you get cheap deposits, then you actually can make money. If the deposit cost increases or you lose deposits, you have to rely more on fixed deposit, time deposits, then you lose out. So I think it's a tough space to be in, but the larger institutions should do very well. Many of the larger banks have also fallen 60-70% from the top. So my advice to most will be, why go for risk when you can get the larger ones also 60-70% cheaper?
Sir, in addition to that, right now, if we talk about the some private banks, those who are the very consistent to be the creating the wealth for the investors, so they are also 30 to 40% down from their peak. but still they are trading at 3 to 4 times of their price to book value. Where the US, if the banks are still trading at the 1.5 or 1.7 times to the price to book value. So in the current scenario, looking at the historical down of the price, can the investor chase these particular banks, or should they still wait to correct something?
So financials, all of us know, Rahul, are almost 40% of the market. So the index behavior largely depends on how the financials move. So if the view is that the bottom made in March should hold, then there is a possibility that many of the larger banks could still give back 10-15% of their gains from the levels at which they are now. So people who are willing to take that hit could look at investing now. Otherwise, people could spread it out and invest, because eventually, if the Indian economy has to do well, the larger financials will have to do well. So they obviously became overvalued. Now they are in some real value zone. They could become cheaper than intrinsic value over the next few weeks, and I think that will be the opportunity.
And sir, in particular banks like Bandhan Bank, RBL Bank, IndusInd Bank, is there fear of sentiments in the mind of the investor, or there is something financial problems in the some banking system itself?
Yeah, obviously, it's right now, given the levels at which they have fallen, it's more about fear. But then the reality is that most of the people are wary of keeping money deposits in some of the smaller institutions, and that will hurt these companies, because with the overall interest rate regime coming down, the spreads will reduce overall. So in a reducing spread regime, if you cannot get cheap deposits, and if you have to take term deposits, then the money you can actually earn becomes lesser and lesser. And on top of that, you have some historical assets which could actually go bad. So I think it's going to be a tough space for the smaller ones.
Sir, one question: that once lockdown lifts up, what would be the impact on heavy industrial product industries, or the industries involved in capital products manufacturing, or industrial applications manufacturer? I think that currently what is the scenario that these people are not able to manufacture, and if lockdown will open, then also migrant labor will not come, and there must going to be a hamper to this manufacturing industries. So that is what we can perceive. And also, whether these manufacturers should try on innovation or out of box thinking. Do you think so?
Yeah, they could, but I think the reality is that in terms of heavy machinery, etc., the demand will remain very muted. The private investment cycle is, as it is, bad in India, has been bad in India for several years. There was an expectation of revival, which might not come to now. Chemicals, etc., is a different story, because if there is some relocation out of China, if people start to diversify their sourcing basis, then obviously some of the chemical companies could actually benefit. On the migrant issue, I obviously commented upfront itself that the government eventually might want to open up. But then if the sentiment in the labor right now is that first they want to go home and then come back and start working. So I think if that sentiment exists, then obviously the comeback for the industry will be slow.
Sir, one question is from the CA Gopal Shah. He is asking with regard to the PSUs. Now the PSUs are trading much below their book value itself. At the same time, they are trading at the 4 to 5 times of price to earning and giving the very good dividend yield. So if anybody who want to go for the debt fund, can they invest in this particular PSUs to get the return of 6 to 7% as a part of dividend, or it is just a trap?
So in some companies it could be a trap. For example, in a company like ONGC, etc., it could be a trap. But in case of oil marketing companies, or for example, let's say something like NTPC or Bharat Electronics, or so there are a lot of companies which are very cheap, where the businesses are not going to be impacted so much by whatever is happening in the economy. So there it's not a trap. So I think there are PSUs which are a trap, there are PSUs which are not a trap. So you need to distinguish.
Sir, is it advisable to invest in mutual fund instead of stock directly?
Yeah, so I would think so, because for people who cannot track the stocks themselves, who don't have a time and who tend to invest on tips, as an investment advisor, I get so many portfolios of so many people who send to me that I please review them. You see, those portfolios are 100, 200 stocks, because people keep on buying on tips. So wherever they make a profit, they exit. Wherever there's a small loss, no one wants to exit. So all the loss-making stocks keep on building up, all the profit-making stocks go up, and in the end, you have a losing portfolio. So if that is what you are going to do, then it's better you be in mutual fund where at least on paper some fund manager is looking at those stocks very closely.
Sir,
Yes.
one sector
No.
that is left out is the auto sector and the auto ancillary.
Auto is a tough sector, especially because of the fact that now there's a theory here also. See, the last few years has been all about shared mobility. So people said that use shared cab, use Ola, go in metros and all of that. Now, for a few months after the lockdown opens, I think it could be personal mobility. People might say that, no, I want my own car. I want to travel in my own bike. I don't want to travel in a taxi, or I don't know who's traveled in this before that. So that is something. What impact that will have on demand, I don't know, because see, a lot of us in the private sector or people who are private company employees, their incomes could get impacted. But there are over 2 crore government employees in the country whose income levels remain the same, who are not impacted by this entire thing. And with interest rates also coming off so drastically, there might be a set of people who might decide that we want to buy our own thing. Or especially, and even in some of the rural areas, if the rabi crop is good and they get good prices, cash flows could be good. So I think there are two pulls here. I think that for many of the auto companies in India, the good part is that they don't have debt except for Tata Motors, and possibly Ashok Leyland has some debt, but most of the other ones don't. Two-wheelers, Maruti, etc. Uh, so Enfield, Escort, a lot of these companies don't have debt. So to that extent, they can sustain the downturn, and eventually the upturn will come. So I think if you get them cheap enough, you should buy. For example, 1600, below 1600, whenever I'm getting Hero Motocorp, actually I'm adding in my portfolio just as an example. I see a value zone at that time because I see single digit P, high dividend yield.
Sir, why positive impact of low price of crude oil is not yet seen? That is what one viewer has asked.
Because there's no impact. No one is consuming. If you can't drive your car, where is the positive impact of that? And the prices have not come down. So the government is just whatever amount of fuel they are able to sell, they are just retaining those gains. I think that is the thinking process of the government, that they will not cut prices. Whatever benefit or lower crude prices are there, they will just use it to possibly upfront. So what they want to do is they want to take the money from you itself, but what they will take it from you over the next 1 year, but they'll spend it upfront. At least that's what I'm hoping for, that they'll spend 3-4 lakh crores upfront and gain that out of not reducing fuel prices over the next 1 year, which will make them 3-4 lakh crores.
So, sir, do you agree right now that right now the price of the crude is below $30? So, can the government create the reserve of the crude right now?
So reserves, creating reserves is not so easy, because you have those reserve. So there's only limited amount of capacity which could get built up in India over a long period of time, and that happened. So I think I'm not sure how well connected those areas are where you can store that, and most of the other facilities I think are already filled to the brim. So I don't think they have the ability. The other thing they could have evaluated was that buying long dated options on crude over the next 2-3 years, which are also near around current levels. But then what I actually found out was that they are not available in such a great bulk amount that they could practically buy so much that it makes a difference to the country.
Sir, worst had come or yet to come? That is what one has asked. Nishant Vekaria had asked this.
So that worst now depends on what he's asking. Worst for the stock markets could have got over, but whether the markets will correct back again, I think it's a reasonable possibility which we need to keep in mind. Worst for someone, a particular person or not, has come or not, I don't know, because I think the worst for some of the people who could be losing jobs, whose industries could get impacted, etc., could still be yet to come.
So, sir, when can we see then connecting to that up level of 12,400 again? How much time it will take?
So unless and until the government comes out with a bold fiscal program accompanied by reforms subsequently, I would think that it could take maybe 1.5, 2 years for us to get back to that level. And I think that will be a reasonable possibility.
Sir, one of the questions that we have received is why the PMS has not adopted the stop loss policy during this recession and continue to hold all the stocks.
Now it depends on particular PMS, so I don't want to really comment on that. But in any case, all of us know in long-term investing, there is no concept of stop loss. So the stop loss is more about trading. So then it's a question of the particular fund manager taking a view on whether what kind of decline could happen. So I would think that people should not be so harsh on someone, because this situation is unprecedented. So I was negative in December, Jan. I was expecting a correction till around 10,000 levels, but it will go to 8,000. No one could predict. So if there are people who are sitting today and saying that I could predict that 8,000 is going to come, I think they're just lying. So I think that's how the situation is. There was an unprecedented situation. It created this issue. Whether people could have reacted to it or not reacted to it, it's all now historical analysis, which makes no sense.
Sir, China Central Bank increases the stake in HDFC just before few days. What will this indicate, considering what, like, is it a bottom up, or it is the strategy of the China? As yesterday also we had news that they have acquired in European companies also.
So Europe, they have been acquiring on a continuous basis. In fact, Milan, and so Italy was actually mini China. How many direct flights were there from Wuhan to Milan? So that's why it spread in Italy so much. All these Chinese companies have just gone and acquired private family-run businesses left, right, center in Italy. Now, from the Indian perspective, I think it's not great, because as the HDFC chairman clarified, the People's Bank of China already had 0.8% in March 2019, 1 year back. So just 0.8 has gone to 1% in a period of 1 year. So I don't think it's of no significance actually.
Sir, the question raised for HDFC Bank. So will the Aditya Puri retirement in August would impact the same?
It could, and I think that it's a real concern, because top management does matter. Why could HDFC Bank do so well in the same ecosystem where many of the other companies faltered? Why could Kotak Bank do so well when many of the other company peer group banks faltered? So it's a question of leadership. Leadership does matter, as the leadership matters for a country. So leadership matters for country, and leadership matters for a company. Whatever process driven stories are played out, so processes can only help till a particular level of time. So it could have an impact. Now, so that Aditya Puri premium could go away. Whether they cope up and come back again and they show the same resilience, then it could retain its luster.
Sir, continuing to that earlier question, is there a big threat of China taking over Indian companies?
No, it is not, because in India, like all of us know, the currency is not convertible. Most of these other countries have convertible currencies. Both capital and current account are totally free, so you can just bring in, bring out any amount of money. the rupee is not convertible, so it's not so easy for Indian companies to be taken over. If you have a convertible currency where there is no restriction, then it's a different story. So India actually doesn't have that risk.
Vishan bhai, any questions we have left?
Yes. Sir, can you flash lights on bankers' perception about their credit policy or some liberalization in credit policy for flexible pending for all SME, MSME, and corporates?
Yeah, so from the banker side, see, RBI has given a particular dispensation. They have said that you can postpone your payments, EMIs, working capital interest, etc., till 30th of June, and it will not become an NPA. So that is what RBI could do. The next step has to come from the government, because real benefits in terms of actual write-off of interest, some interest burden being taken up by the government, or the government giving a backstop to the RBI to take the risk on its balance sheet, that if there's RBI makes any loss, then the government will take care of it. All that has to come from the government, but then that requires a lot of lateral thinking, which we need to see whether it will happen or not. I'm not so sure.
So, sir, your view in that connection only, that not providing the moratorium to the NBFCs for making the payment to the banks.
Yeah, so ideally it should be done, because the issue NBFC faces that their clients will not be able to pay to them, and in turn they cannot pay to the banks. So I don't know why this has been done, but then I think they are making representation, so maybe we'll get some flexibility going through.
Sir, can we say that this is an opportunity for India when everyone in the world is refusing to do the business from China? How our manufacturer or investor can take benefit of this?
Actually, all of us hope that could happen, but the world is a very disparate place where people are just looking for their individual benefits. And in that context, whether the world can come up together against China or not is something which we don't know. But India could make a place as an alternate sourcing base, which they should do, but that requires a lot of strong government policies, cheap funding, cheap access to land, etc., which all these Chinese companies get, which many of the companies have been asking for, but have not got till now. But going forward, as we know that whenever there is a crisis, after that our governments tend to do better. So we are in a crisis, so hopefully the government will do better after this.
Sir, the last request, if you can tell us 10 scripts, promising scripts to invest.
Multi-baggers, as I said in the beginning.
I think I'll skip that question, because I actually named out many companies during my interaction, and all of those companies I find to be decent ones. So I don't want to give a list kind of thing.
Okay, sir. Sir, no list, but can you give the impression that in current scenario one should stick to the quality of management, be a blue chip company, but should stick to those, or one can go for the chasing mid cap, small cap also?
See, small caps will take time to recover, but large established mid caps, yes. For example, I talked of the multiplex companies; those are mid caps, but they are large established, good companies, good businesses. So eventually, as we come nearer to the crisis, you will find investors will wait for the cinema halls to open before they think that we'll buy them. But actually, once the lockdown ends, I think the stocks will bottom, because once the lockdown ends, people will know that eventually they are going to open now, and the stock will bottom there. So I think those are the opportunities which people should look at.
Sir, people are keep posting questions. So I can say this will be the last question. Reliance announces to issue bonds of 10,000 crore. How will it impact on the share price of Reliance?
No, it's not so relevant. Reliance has a total debt of around 2,80,000 crores. This bond issue could be just to refinance some earlier bond they had, or in the near term, because their refining business obviously comes under stress and they could have some cash flow issues because they would have bought cargoes and they are not able to sell their product, etc. So there might be some short-term cash flow mismatch for which they might be borrowing. But from the stock market perspective, this specific news has no significance.
So I guess we end here our webinar. I request all to give a big round of applause to Sandip ji. On behalf of Ahmedabad branch of WIRC of ICAI, sir, we are thankful to you for giving your time and your views on different sectors of industries and stock market. Thank you very much, sir. Thanks.
Thanks a lot to all of you. Sometimes when you are speaking in a forum, your own thoughts also get cleared out. So I think that also helps. Thanks. See you guys.
Thank you. Thank you. Namaste. So we all are meeting at 5 p.m. today for our third webinar of today. I request all to join on the link which has been circulated. So we'll meet at that time, and the topic is valuation under GST. Also, you can think of your questions, you can post it. We'll try to answer those questions. Thanks and goodbye.